Hello traders, in this video I'm going to give you an update on my swing trade with SPXL. That's an S&P 500 ETF. It's leveraged 3 times, so if the S&P goes up 1%, this goes up 3%, but likewise if the S&P goes down 1%, this goes down 3%. So the basic idea behind my swing trading plan with the S&P 500 ETFs, and I want to make that clear, this is not a generalized swing trading plan, this is just for S&P 500 ETFs. The plan is basically to follow the trend of the 50 MA, right? But I don't assume that it's going to bounce off the 50 MA every single time, even though it looks like it does. You might say, well, just dump everything in to this ETF down here and then you ride this trend up, but there's no guarantee that it's going to bounce, even though it usually does. There was even a recent example that I'll show you toward the end where it fell way below the 50 MA. But let's go back in time. So basically, the plan is to kind of follow these bounces off the 50 MA, and that's what I've been doing, and I've been profitable so far doing that, which is something that 90% of traders are not able to do. And again, that's not a brag. I'm just trying to emphasize the importance of having a trading plan. I know exactly where my entry is, where my exit is, and when and where to move my stop loss. I know all of that before I even enter the trade, and I don't make any changes once I'm in the trade. And that is absolutely crucial. Otherwise, you're not going to be a successful trader. So let's move back in time and see why I chose this 50 MA as my kind of get in and get out signal. So here we are back in, let me zoom in a little bit. This is 2019 going into 2020, and you see this very nice trend above the 50 MA where the price is just continuously moving, and maybe you got in over here around $51, maybe you added a little bit over here around 58, so maybe your average is around, let's say 55 or 54, we'll say, and then it comes down and bounces and you think, well, this thing's so strong, it's got to keep going up, and you add more here at 65, so maybe now your average is about 60, and the price continues, goes all the way up to 76. That's a $16 difference per share, which is really nice, but then what happens? It comes down and gaps down below the 50 MA, and maybe you got out, maybe you didn't, I don't know, that this is all hypothetical, obviously. But I'm just trying to paint a picture of why I chose this type of a trading plan. And let's see what happens after this thing continues down below the 50 MA. It comes down to the 200 MA, and you're thinking, well, it can't go any lower than that. You add more there. And yeah, maybe your average is down now into the high 50s or something like that, but or low 60s. But still pretty high relative to where the price is. And now this is a losing trade, which was once you were up $16 per share. So let's keep on moving on. And again, that was the high point, and I'm not suggesting that anyone's able to time the high. That's pretty much impossible. But even where was the 50 MA over here was about $70, and we said maybe your average was $60, so you were up $10 per share if you were moving your stop up with the 50 MA. So keep that in mind. And then look at this price action as it comes down. It goes lower, and then finally you get a big green candle, and look at this volume ramping up, and you get this huge volume surge, and you're thinking, well, this is it. This has got to be the reversal. So you get back in here around $50, and what happens? Oh, looks like you're right. This thing's going up. And then a few days later, oh, it's going back down. Now we're in the 30s, and a few days later, and it goes all the way down to $16, right? So the point is that it's impossible to determine where these things are going to turn around, especially when there's something extreme happening in the news like the pandemic or stock market crash or whatever. So that is why that I have a very specific plan that tells me when to get in, when to get out, where to move my stop loss. And that's why with these S&P 500 ETFs, I chose to follow the 50 MA, because if I get out when the price comes back down and touches that 50 MA, I will avoid whenever the next crash is, because we know eventually there will be one. I have no idea when that's going to be, but I don't have to worry about that kind of thing because I always have a hard stop in place. So let's move on and see the current trade that I'm in. So I've been trading the S&P 500, swing trading it since the beginning of the year. So right about here is when I started kind of following these bounces, and I've been profitable so far doing that. I've only lost one trade with SPXL, and I'll show you that one. And I've since changed the plan so that I can't take that trade. And it's not in an effort to to not have any losing trades. I think that's a silly goal to try to accomplish because it's impossible. You're going to lose some trades. But this trade had added risk that I don't need to take, and that's why I removed it. So basically what happened was maybe 3 trades ago, I was entered over here. Then the price is moving up and, I'm following the 50 MA. I add when it comes down below, not below, but when it comes down near the 50 MA, but I wait till it gives me a sign of reversing and I add to the trade, continuing. But I made sure that with that add, I was still profitable. So as soon as I added, I could not lose the trade basically if it hit my stop loss, even with that add. So that was the reason that I added there. And then I did add one more time, I think, over here because I got kind of tricked into a reversal. And then I got stopped out over here. And that was one of my biggest winning trades yet. So anyway, the next trade was when this thing came down below the 50 MA. As soon as it showed signs of reversing, I got back in. But I placed my stop loss below that daily candle, which I think was wise to do. And waited until the price action closed completely, or actually opened and closed above the 50 MA before I was going to move my stop up, but that never happened. And the price, let me zoom in a little bit here. The price came down and stopped me out a few days later, and I'm totally happy with that trade because if it would have continued down, then I would have just suffered a much larger loss than planned. So I'm glad that I got out when I did. And then I waited for true signs of a reversal and confirmation that this thing was headed higher. And it worked out. That doesn't mean that it's going to work out just because you wait for those signs, but it gave me more confidence. And what those signs were was that once the price opened and closed above the 50 MA, then I entered when the first daily candle made a new high. So this is where I'm at right now. And I'll unlock the platform and show you my position and move my stop into place. But basically, I got in here around this 119 level and my stop loss was at the 50 MA. And I've been moving it up ever since. And the reason why I like to use that 50 MA to follow is because otherwise I would probably be following the daily candles up with my stop loss. I think most traders would do that. So let's say every single day I just move my stop loss up with these daily candles. I probably would have been stopped out on one of these 2 days over here because my stop loss would have been just below this daily candle around this 123.50 level. And I almost guarantee I would have been stopped out on this candle. Otherwise, if not, which is very unlikely, I would have continued higher and then I would have been stopped out here at 127. But then you'll see how far this thing went afterwards. It just keeps going up and up and up. And now it's looking like it's going to pull back again. And now it's going back to all-time highs again. And here we are today. So we're trading right just below all-time highs, and we really don't know what's going to happen in the future. But let me unlock the platform, and I'll show you where my stop loss is right now. Actually, this is as of last week, last Friday, which I think was this candle. So we're going to move it according to plan up to the 50 MA today and show you the difference. So here we are at 121.48. That was as of last Friday. Today, the 50 MA, if you look over here at the price, actually you could just look right there. It's 123.05. So I get to move my stop loss up that much in 1 week, which is really nice. It's about $1.50 or so, times the amount of shares you have. And this is a small trade, trading with a pretty small account here and kind of trading carefully, conservatively. I've only been trading a year and a half, so it would be stupid to go all in on stuff like this, or full position size, I should say, or large position size. So anyway, that's where we are this week, and I'm going to continue to follow that. So you can see right now where my stop loss is very near the low of these candles, where I said I would have gotten stopped out had I just followed up my daily candles. And I guarantee you by Tuesday, we're going to be above that level. That stop loss will be above that level. So that means that this plan has already beaten the easier or maybe like less thoughtful plan of just following the daily candles, which is something I did try in the past. So anyway, and if we're lucky, we will get even higher than this level. I don't know if that's going to happen or not, but in any case, I like this plan a lot because it just is a very low stress and easy to maintain plan, and I don't worry about the day-to-day fluctuations. I just come and check the stock, or the ETF in this case, at the end of every day, see where the 50 MA is, and I move my stop loss up. Today I just had it for effect of this video, I had it where it would have been last Friday. So now let's go to my spreadsheet and I'll show you the difference between last week and this week. So now we're at 123.05, and again, we only have 5 shares. So last week we were at 121.48, which is only a profit of 870 if we would have got stopped out, but of course that was not going to happen. It's just where it was at the time. So 123.05. Let's see what happens to the P&L. As of right now, this is unrealized, 1655. So big difference, more than double. And obviously, this is going to continue higher. The way the 50 MA works is it's a 50-day moving average. So no matter what the price action does, you could see that even when the price action came down for, let's see, 1, 2, 3, 3-ish days in a row, the price action came down. During that entire period, the 50 MA continued to move higher. And that is what will happen because it's an average of 50 days, not, 3 or 4 or 5 days. So anyway, the point is no matter what happens to this price action from here on out, the stop loss is going to continue to move higher. We're going to continue to have more and more unrealized gains until the price finally comes down and touches the 50 MA, and that time the stop loss will be hit and our unrealized gains will become realized gains. So anyway, hopefully this made sense to you and shedded some light on why I trade these S&P 500 ETFs the way that I do, and not just follow daily candles or try to look for some signs of obvious weakness or something like that. I just think that this plan is much easier to follow, and as I said, so far successful. We can look at the spreadsheet, and this P&L, total P&L, does not include this current trade. So I guarantee you that that is going to go up to probably around $90 by the end of this trade, maybe more. And the average amount that I'm trading with on these trades is less than $500. So let's say we get to the year end, which is not very far away, and I end up making around $100 off of these swing trades. That is an increase of 20%. And that's not even over 1 year. That's about a half a year because we started trading this thing in May. So a 20% increase in a half a year is exceptional. If you look at like hedge fund returns, they're around 20%, maybe 30% per year, the very best hedge funds. So this is equal to what a hedge fund can produce, definitely better than any savings account or CD or something like that. And it's a lot less risky and volatile than individual stocks. So that's the whole point behind this system. So if you have any questions about this, about the spreadsheet or the trading plan or anything else, let me know in the comment section below and I'll get back to you. As always, the main message that I want to drive home is that you should go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.